So hello traders and welcome back to this session. So this is a newly introduced session whereby I'll be going to be looking at the weekly market snippets. That is basically an outlook of the previous week and also an outlook of the coming week. So basically that's a preview of the best way to put it is a preview of the last week and an outlook of the upcoming week. So my name is Timothy Carrier and let's get into it. So this is a global market snapshot and also looking at the US market performance because the US market has been quite in the spotlight, especially with the ongoing US tariffs. So looking at the Dow Jones, that is the DJIA, that is the Dow Jones Industrial Average. Last week, we saw a rebound of 2.5%. So the markets were able to gain 2.5%. And also year to date, we are at negative 5.7%. So S&P 500, it gained last week 4.6%. And year to date, basically it's negative 6.1%. NASDAQ weekly earnings, weekly gains, that is 6.7%. And year to date, we are at negative 10.0%. So the DXY is last week was able to gain 1.47%, and year to date we are talking about 10.02%. When we look at gold, last week it was bearish, and we saw actually last week it was able to gain negative zero. It was able to lose negative 0.82%, but year to date we are at positive 26.32%. So this is a bit different from what we had last week, but because last week, but the markets were still reacting to the US tariffs, but after the pause of the tariffs, US starting to ease in terms of tariffs. We have seen now the index and also some of the stocks that we are going to look at as well being able to at least become or attract some gains. All right, we cannot be able to say maybe probably bullish because the trend has not yet really changed for us to confirm that we are now bullish, right? So let's look at the US markets, basically the US equities. So when we talk about the US equities, mostly we are talking about, we saw the major indices, we have been able to see the Dow Jones, the S&P 500, the NASDAQ, they had a rebound amid optimism of a potential tariffs reduction, right? So when we basically maybe a key look at the S&P 500 and the NASDAQ 100. So they were both able to surpass key resistant levels, and this was basically supported by strong performance in the leading stocks. So the European market, the FTSE 100 achieved its longest win streak since 2019, benefiting from a global capital reallocation and investors' preference for defensive stocks. So when you look at the Asian markets, Japan's Nikkei 225 experienced significant volatility with a sharp decline followed by strong rebound, reflecting investors' reactions to tariffs developments. So basically, that's what we have in the terms of the US equities, the European markets, and the Asian markets. So when we narrow down now to the US markets, when we narrow down to the maybe to the not really to the US market, but when we narrow down now to the sector highlight, we find that technology sector basically led in terms of gain. So, and this is basically shows investors optimistic about AI and cloud computing prospects. When we talk about the energy sector, it experienced volatility due to fluctuating oil prices and concerns over global demand. When you look at the consumer staples, they remained stable, reflecting investors' preference for defensive sectors amid economic uncertainties. So, and the consumer staples, this is one of the stocks that I usually recommend investors never miss some stocks from the consumer staples because even during economic downturns, basically you find that this consumer staples sector, basically it has some very good stocks that basically withstand the economic downturns, all right? Because consumer staples, these are companies that basically deal with basic needs, all right? So whether the economy we are in an inflation, whether we are in deflation, basically we have to feed, right? So definitely the reason why now the consumer, it's consumer staples is regarded as a defensive sector, right? Amid economic uncertainty. So this is the S&P 500. If we have a very close in terms of looking at the S&P 500 and the sectors themselves, how they are being, how we are projecting this, looking at it, the sectors, the companies within the S&P 500 and in different sectors. So when we talk about the consumer staples, year to date, we are talking about 6.5% gains. And when we talk about weekly, last week we had about 2%. Okay, so as you can see, consumer staples, they are quite defensive amid what we are going through in terms of economic uncertainties in relations to Trump's tariffs. So utilities follow suit. Year to date, you're talking about 3.5%, and the previous 1 week, we are talking about 1.9%. So real estate follows suit, 0.1%. Then weekly, 3.9%. Okay. So we can see the real estate now starting to come up strongly. So the rest, we can see the healthcare, the material, the financials, the energy, industrials, all of them have the consumer staples, the consumer services, technology sector, and consumer discretionary. All of them, they had negative gains from year to date, and also looking at the previous week, right? Looking at the previous week, and the consumer discretionary. This is companies that basically deal with the luxurious things, all right? So Tesla is among the consumer discretionary. So we see year to date is a negative 19.5. Last 1 week, we are talking about negative 3.2. So they lead in terms of losses, because when we are in economic uncertainties, definitely you accept consumers to forego the luxurious thing. So they basically focus on meeting the needs, and the reason why the consumer staples are leading in terms of gains. All right. So that's quite interesting. So looking at the volatility index, we have seen a lot of ease as trade basically as we see basically as we are witnessing the cool down in terms of trade tensions. So as you can see here, April 2nd, the tariff day, which was also referred to as the liberation day, we saw all these the volatility index and also the Bloomberg Trade Policy Uncertainty Index. They both of them skyrocketed to the peak about almost 55. The volatility index was about almost 55 on April 9th. Then on April 9th, when the tariffs were put on hold, 90 days pause, we see that now the uncertainty tried to cool down. So this is at the 24th of April 2025, and we see the volatility index down all the way to about 29.86%, the same as the Bloomberg Trade Policy Uncertainty Index, right? So basically what we are seeing is the peak uncertainty, which is likely behind as the US eases the trade tensions. Okay, so this is something to continue watching, basically in terms of what will unfold in terms of trade tariffs, and basically it's going to shed light in terms of the volatilities. All right. So looking at the currencies and commodities, basically we can be able to attest that the US dollar has been strengthened against major currencies, and with the dollar index rising amid global economic concerns. And this is as a result of the halt in 90 days tariff. and also the ease that we are seeing around the US with Donald Trump now trying to cool down. We also saw a statement last week, Donald Trump saying that he will the tariffs, the China tariffs will drop down significantly, but not to zero. Of course, these help to elevate the dollar or to support the dollar. And also we saw Trump erasing the market sentiments that were ongoing around when he attacked the Fed chair, Jerome Powell, saying that he should have lowered the rates like other central banks. Then there were uncertainties or there were rumors that Trump gonna fire Jerome, but unfortunately, or fortunately, Trump was able to put or to clarify on the issue, and he said that he has no intention to fire Jerome. Actually, Trump himself is the one who appointed Jerome during the first time of his presidency, the first term of his presidency. So confirming last week that he has no intentions to fire Jerome, again also helped to support the dollar. And the reason why we have been seeing the dollar index strengthen against other currencies. So when you look at gold prices, even though they have been retracing, but they remain elevated as investors seek safe havens asset in response to the market volatility. So the drop that we are witnessing now is because of the strengthening. It's because of the strengthening of the dollar, because gold and the dollar are inversely correlated. So when dollar is strong, we see gold tend to sell. When the dollar is weak, we see gold buying. So when we look at the oil prices, basically the prices have been fluctuating due to fears of a possible recession and decreased demand. So we had chances of a recession basically at about 40%, and still remain, even right now, we are still talking about the 30% chances of a recession. But honestly speaking, now with the easing of the US tariffs and looking at different economic indicators, to me is a bit uncertain whether the US is gonna be maybe probably enter into a recession. So I am in a nutshell, I'm not looking at a situation where the US is going to be in a nutshell. Even though we had all that drama around the tariffs, it's not the first time that we witnessed these tariffs thing happening around in the globe. Even the first term of President Donald Trump, he introduced the tariffs. But I think this time round, there was the surprise such that maybe probably we didn't expect things to turn out rosy as we saw things turning out. We didn't expect the retaliation. Right now, we are talking about 145% on China's tariff, all right? So we didn't actually what happened is that we didn't expect that big impact, right? Maybe probably investors were looking at it. Yes, this is normal. We saw President Trump in the first term basically implement some of the tariffs, and we didn't have the significant impact that we are seeing right now. Okay, so looking at the global economic indicators, basically we are talking about when you look at the IMF outlook. So the International Monetary Fund, basically last week, but one, it lowered its global growth forecast to 2.8, and even this week, we are talking about the same 2.8% for 2025, and this is as a result of the impact of widespread tariffs and which has resulted to a lot of uncertainty. When you look at the US gross domestic product, basically the economic growth projections were adjusted downwards with concerns over the potential drag from ongoing trade tensions. When you look at the Eurozone, basically in terms of inflation, it is expected to fall, basically to meet the European Central Bank's target of about 2% amid concerns over impact of the US tariffs on economic growth. So those are key parameters or key things to look at because these are the global economic indicators. So when you look at the Federal Reserve, we have been having, like I said, we have been having a lot of discussion going around with the Federal Reserve. We saw Donald Trump, President of the United States of America, the 47th President of the United States of America, basically attacking Jerome Powell last week, but one when Jerome Powell basically gave a speech of the U.S. economic outlook and said that they are not seeing as if tariffs are going to make the rates go down, or maybe probably. If I put it in a simple language, he basically said that tariffs are inflationary. And if tariffs are inflationary, therefore, there is no way that they are looking at maybe probably lowering their interest rates. Right now, they stand at 4.5%. So, and we saw Donald Trump, basically trying to attack Jerome Powell because of that. But again, he came in and retaliated and said that he has no intention to fire Jerome. So what we are looking forward is for the Fed. Basically, we are looking at it maintaining the current interest rates, with the market participants closely watching for any policy shift in response to economic data and political pressure. Economic data like this Friday, we are looking ahead for the US NFP data. And also we have the PCE, which is an inflationary measure. Okay. So in terms of political development, what we are looking at is the U.S. tariff policies. They still remain on the spotlight. President Trump's global trade tariffs continue to influence the market dynamics, with investors closely monitoring potential policy shifts. So in terms of international relations, we see tensions with key trading partners, that is U.S. trading partners, including China and the European Union, basically remaining high, contributing to market uncertainty. So there is still that uncertainty in terms of international relations, again, which has been catapulted by the tensions, the tariff tensions, right, or the trade policies that are being implemented by the US. So, in terms of corporate earnings, last week we were able to see Tesla on April 22nd. Tesla were able to release their earnings report, and basically, in a nutshell, the earnings report Q1 2025 for Tesla reveals significant declines in both revenue and profit. Looking at it maybe in breakdown, we saw the revenue at 19.34 billion, down to 9% year over year, missing the expected 21.35 billion revenue target. So in terms of net income, it reported $409 million, a 71% decrease from the previous year. Earnings per share, that is the EPS, was at 0.12 dollar, falling short of the $0.33 consensus estimate. So basically, the reasons why, or maybe probably some of the things that we look at in terms of the challenges that lie ahead, that is, we have the brand perception, whereby Elon Musk political activities have led to consumer backlash, affecting sales in key markets like California and Europe. The tariff impacts, of course, the ongoing trade tensions and tariffs pose risk to Tesla's global supply chain and cost structure. In terms of market competition, we see increased competition from the Chinese and the European EV manufacturers, which is impacting Tesla's market share. Also, we were able to see the results for P&G, that is a Procter & Gamble Q3 2025 earnings report, basically, which were released on April 24, 2025, revealing a mixed performance that led to a downward revision of its full year outlook. So if we look at the financial highlights during the earnings reporting, we saw the P&G reporting a revenue of $19.78 billion, which is a 2% decline year over year, missing its expectations, or analyst expectations of about $20.42 billion. So the core EPS, that is earnings per share, reported $1.54, slightly below the consensus estimate of $1.57. In terms of net income, we saw P&G reporting $3.77 billion compared to $3.75 billion in the same quarter last year. So we see a slight increase in terms of the net income. So if we look at the revised fiscal 2025 outlook, basically the core EPS is now projected at 6.72 and $6.82, down from the previous range of 6.91 to $7.05. Okay, so what are maybe probably challenges that might impact performance? So we are talking about the tariffs pressures. So the new US tariffs could add up to about 1.5 billion in annual cost, prompting potential price increases and cost cutting measures. So if we look at it in terms of consumer demand, the economy uncertainty and trade tensions have led to cautious consumer spending, affecting the sales volume for P&G. In terms of segment performance, we have seen we were able to note a decline in the beauty, grooming, fabric, and home care, and also baby, the feminine and family care segments, while the healthcare sales remained flat. So we were also able to witness the same April 2025. We saw Google, or commonly known as Alphabet Inc., which reported their Q1 2025 earnings, delivering results that surpassed analyst expectations and actually highlighting the company's robust financial health and strategic investment in artificial intelligence. So right now, companies that are basically trying to revolve around the AI, they are on the spotlight. These are the companies that you want to look at keenly, because you are seeing a boom in the AI sector, even though now the US tariffs have maybe slowed down the earnings for these companies. So for Alphabet Inc., Q1 2025 financial highlight, in terms of revenue, they reported a $90.23 billion, a 12% year-over-year increase, exceeding the anticipated $89.18 billion. In terms of net income, they reported that $4.54 billion, up 46% from the previous year. So earnings per share, they reported $2.18, surpassing the expected $2.01. So in terms of operating income, they reported $30.6 billion with an operating margin of 34%, up from that 2% a year later. So Google Cloud revenue, they reported $12.3 billion, marking a 28% year-over-year growth. Advertising revenue came at $66.9 billion, an 8% increase from the prior year. So the stock performance, we saw that Google stock was able to rise over 4% in after hours of trading, after now the results were out. So the strategic investment initiatives, basically we are looking at AI development, whereby Alphabet remains committed to investing $75 billion in AI infrastructure in 2025, focusing on data centers and servers to support growth across Google services. So in terms of AI overviews, the company reported that AI overviews now serve 1.5 billion users monthly, indicating significant user engagement with AI-driven search features. So dividends and share buyback, Alphabet announced a 5% increase in its quarterly dividend to $0.21 per share and authorized an additional $70 billion in share purchases. So what are some of the consideration and challenges that maybe probably that Alphabet Inc. is looking at? So of course, we cannot ignore the regulatory scrutiny, where Alphabet faces ongoing antitrust challenges, including rulings that its search engines and advertising network constitute illegal monopolies, which could lead to significant operational changes. Also, we cannot ignore the market competition, whereby we have seen the company continue to face competition from AI-driven search alternatives and must navigate potential impact from global trade tensions and tariffs. All right. So basically, those are the companies that were able to report their earnings last week. This week is quite interesting again because we are looking at the tech giants, the likes of Apple, Amazon, Microsoft, and Meta, which are expected to release their earnings results this week. So Apple basically they have a revenue forecast of 94.08 billion dollars. Microsoft are forecasting a revenue of 68.43 billion dollars. Amazon are forecasting a revenue of 155.11 billion dollars, whereby Meta is basically forecasting 41.34 billion dollars in terms of revenue. So we also have the energy sector, companies like ExxonMobil and also Chevron. Also, we are looking at consumer goods, such as consumer goods sectors, companies like Coca-Cola, McDonald's, which we are anticipating them to basically release their earnings report. All right. So also maybe probably we cannot be able to ignore also companies like Mastercard, Visa. They are all anticipated. Caterpillar Inc. That we are all anticipating those companies to be releasing their earnings. So it's quite a busy earnings week, and this is definitely one of the interesting week that investors are actually looking at. All right. So in terms of upcoming economic data, so the key major data that we are looking forward to is the US non-farm payroll, which will be coming on Friday. This Friday at 3:30 p.m. GMT plus 3. And it's a key data that basically even the Fed will be looking at because it will shed light in terms of the economic growth in the US. Also, we are looking at the US inflation metrics, that is the PCE, which will be coming out basically on Wednesday, all right, the April 30th on Wednesday. And this is quite significant again because um, it will provide insights into inflation trends influencing Federal Reserve policy decision making. Also, we have the Bank of Japan, which will be giving their interest rates decision as it even remains cautious about the hikes despite rising inflation, with future decisions hinging on developments in the US trade negotiations, right? So also we have the global PMIs. Right, we have the global PMIs, like we have the ISM PMI for the US. Also, we have the manufacturing PMI for China. So these PMIs are basically the essence of the PMIs is they indicate the health of manufacturing and service sectors amid the ongoing tension. So it will be very keen, especially the US PMI, manufacturing PMI, which will shed light in terms of the health of the manufacturing and service sectors in the US. So other upcoming information is that on today we'll be having the federal election for CAD all day. So they'll be having an elections. So tomorrow is basically we're looking at the JOLTS job opening report for the US. On Wednesday, we shall be looking at the inflation data for AUD, that is the CPI. On Wednesday, we shall be also the same Wednesday, we shall be looking at the German prelim CPI. We shall also be looking at the ADP non-farm employment change for the USD, CAD GDP, and the employment cost index for the US. On Thursday, basically will be the key data will be the Bank of Japan, BOE interest rates, and also the ISM manufacturing PMI for the US. On Friday, basically we know it's NFP day, so we'll be looking at the US jobs report. So in terms of US jobs report, we are anticipating to show maybe a significant drop in terms of hiring, with the projections of about 129, all right, with projections of about 129K. And in terms of new jobs, down from the previous 228K. So it's quite interesting. That's what we'll be looking at this week. So in terms of weekly outlook in a nutshell, basically we are looking at the market volatility being expected to persist as investors digest the corporate earnings report, the economic data, all right, the economic data report, and also the political scene, maybe in terms of what is going to transpire, maybe probably in the US tariffs or any other political scenes, the US political, I mean the US China trade war, etc., etc. Right. So before we end, or before I end this session, allow me to look at maybe a quick analysis of gold. So let's go to the gold chart and we see what we have. So this is the dollar index, and basically we are looking at in terms of the dollar index, we have been seeing a bearish dollar index. And what we have, this is the monthly time frame. You can see the last since Jan, we have been bearish with the dollar index. If you look at it from the yearly time frame, you can see we have been bearish, but still the monthly candle has not closed. We still have some more time, basically today, tomorrow, and Wednesday for the monthly candle to close. I mean, not for the monthly candle, but we still have some few more. We still have quite some month. We are in the month of April, so we still have maybe probably May, June, July, August, September, October, November, and December. About 8 months for the monthly candle to close. So we cannot for the yearly candle to close. But when you look at the monthly candle, we are basically looking at about 3 days, Monday, Tuesday, and Wednesday. And where it is, basically, this is a key level from the monthly time frame. This has been quite a key support level. Even when you extend it back to these zones here, so we see this being quite a key support level. So we are keen in terms of looking whether the price is going to break below maybe this in terms of the monthly time frame before in those 3 days that are left, all right? And if price is able to break this level from the monthly time frame, then basically looking at the market structure, these are the levels, the next levels that we are looking or anticipating the dollar index coming to around 93.11 to 89.37, right? So that is in case maybe probably the price will be able to break below this zone. So, but when we look at the weekly time frame, we now start seeing the stability in terms of the dollar index. We see that weekly rejection candle, which actually closed as a bullish pin bar. So suggesting that we might see prices maybe probably pushing on the upper direction. And the first point of interest that we'll be looking at is this level. Of course, we want to see how the dollar index will behave from that level. And if it breaks that level, then the next level or the next point of interest is at this particular zone around 107.88 to 110.28. But the first point of interest that we are looking at is the 103.68 and 104.56 level. That is from the weekly time frame. So like I said, you can see on the weekly, the last week candle closed quite bullish, showing rejection of lower prices. So when we look at the weekly, I mean the daily time frame, we start seeing some quite also price becoming quite bullish. So we see price trying to push up, but again, this level is quite significant in terms of the dollar index. So as you look at it from this particular point, what now we have here, this was a support level, which when you look at it now from the daily time frame, we can be able to see that the level was, we can see the level was broken. But remember now, looking at the weekly, the monthly, we see these, I mean, when you look at the weekly and the monthly, we see a rejection or we see a week. So we can say that right now we are in a point of a neutral stance, whereby we have to be cautious, or we have to wait keenly, observe keenly in terms of what is going to unfold. Because this, yes, it might be a fake out. If you look at it from the daily time frame, maybe this is a fake breakout, all right? So we don't know what is likely to transpire from this level. But honestly, if it's going to close now above this point from the daily time frame, then now we'll be expecting the price to push up to around 103.722 levels, right? So right now we are in a very neutral stance. So we have to wait either the price to break, to close above this level here, or maybe to push down and take out the liquidities, or take out the liquidities at this particular point, so that maybe we can say we are continuing in the bearish trajectory. All right. So right now it's just a matter of sitting down and observing. Okay. So because the same thing we can see from the 4-hour time frame. So this level is quite significant. So in case the dollar index is able to break from this level, then now it will be going on the upper directions. All right. And this is where we have actually the lower high for this downtrend. So if it closes above that lower high, then now we might resume the bearish, we might start confirming the bullish trajectory. But if it doesn't do that and pushes on the downside, then we'll be expecting a bit bearish dollar index. So when you look at gold, basically, let me have a snip view from the yearly time frame, the 12 months time frame. So we can see we are strongly bullish, right? Even the monthly time frame, we are strongly bullish. The weekly time frame also, we are strongly bullish. No bargain on that. But when you look at the weekly time frame, then we are able to see there is a level here, this weekly engulfing, because you can see the rejection of prices. Last week's candle closing a bit bearish, seeing the rejection of prices from the upward trajectory. So the candle closing as a bearish candle. So we might see maybe probably prices fall to this particular point, about the 3,000 levels. So it's not far away for gold to do that, right? It's not far away, or it couldn't be a surprise for gold to do that. Right now it's at 3,316. So we might see it pull about to this level, is about $3,089 per ounce, right? So when we look at it from the daily time frame, so we can see that rejections that are coming in from the daily time frame, but the price has not precisely broken below this level, right? So we are looking, as the price pushes up, we are looking at this level. So the price has not been able to close precisely below this level. So in case now the price is able to close precisely below this level, closing precisely, I'm talking about the body of the candlestick. So if that happens, when we see the body, maybe sell candlestick body, the body of the candlestick basically able to close below like that, so the body of the candlesticks being below, then we might now have the indications that the price is likely to push on onto this level, which is actually the daily order block, right, at around $3,061 dollars per ounce. So we have also to be keen to see how the price does that. If you look at this daily candle, we see it was quite bearish, but we have some rejections. So we might maybe probably either see the price push up, or maybe probably the price break below. So once we have that break below this zone, then therefore we will be talking about the price pushing on the downside. Okay, so if we look at it from the 4-hour time frame, that level still remains significant. All right, so we see the price from the 4-hour time frame. So let me draw that keenly, the levels from the 4-hour time frame. So we are seeing these the liquidity here. So we have almost equal highs at that particular point, right? We have almost equal highs at that particular point. So in the 4-hour time frame, maybe probably if price is gonna push on the downside, we might see the price take out the liquidities and tap into this zone. So this will be the first zone to watch, and then now we will consider this 4-hour zone here. So if it breaks below this zone, then now it will have maybe probably it will get the momentum to come back to come down all the way to 30 around 30.41, right? Around 30.41 dollars per ounce. So that is if it's going to break below the 3,200, all right? If it breaks below that 200, then we might see the price come all the way to 34 levels thereabout. So we are still maybe probably looking at it in this state of neutrality, basically looking at whether in case the prices push up, whether they will be able to break above this level where also we have around this level, all right, which is also a key level, all right. So if you draw like that, you see this is quite a significant level. It was a level of resistance this side. It was broken. Then the price came now, broke again the support. Then now it's acting as a resistant level. So in case we are going to be bullish, then we are looking at this particular level. So in case the price breaks above this level, then we will be bullish, and we will be looking now at the price maybe coming back again to around this particular level where we have the all-time high around 3,500, between 34.51 and 3,500, where we have the all-time high, right? So that's how I'm looking at it. Maybe if we go slightly lower into these time frames, now you'll be able to understand why I'm saying this level is quite significant, because as you can see, the price had already taken out the liquidities, Thursday's liquidities taken out, but you see the price is yet to take out the Wednesday's low. So what we might anticipate right now is the price pushing back again to this level, because that's where we have the order block, all right? That's where we have the 1-hour order block. So we are talking about that kind of a scenario, all right? So maybe probably getting a short entry there, and targeting the prices coming all the way to these liquidities. Or maybe probably in case the price now does not respect this zone, if it breaks above this level, then now we'll be talking about maybe a different scenario. All right, a different scenario. So which will be a long position from that level. Maybe having the stops slightly down below that level, targeting the price to come to this particular level. So those are the two scenarios that we might be looking at, that we will be looking at for this gold setup. All right. So that's what I'm looking at gold, maybe probably reacting to. So, my fellow traders, ladies and gentlemen, that brings us to the end of our weekly outlook. So, keep abreast of what is happening. Remember, usually have our market analysis from 10 a.m. to 11 a.m. Monday to Thursday. Make sure to join those sessions so that at least we can follow up in terms of what you have been able to look. We see how the markets are going to unfold. So make sure that you don't miss those sessions for the weekly, for the daily market analysis from Monday to Thursday, courtesy of Scope Markets Kenya. So that's where I basically conduct the live market analysis, because as you know, the lead educator and market analyst Scope Markets Kenya. So join me, and let's see what transpires throughout the week. So thank you so much, and I wish you a peaceful or a blue week ahead.